The IMF's turning into a one-stop shop for CBDCs. You need to check out this photo. Peter Schiff rocking the Bitcoin hat. We'll jump into that. Before we get into what's going on with the IMF, it's pretty crazy. You can see Bitcoin's flat, Ethereum down a little bit. It is a very red day, ladies and gentlemen. Looking at Bitcoin, it is holding above 26.6, which is nice to see. Big wick up, almost reaching 27 in the last 24 hours. It's a little bit of up, down, sideways. It's probably just going to keep grinding up and to the right over time. Definitely expect volatility. Ethereum 1720. Still looking good. As for everything else, we can get into that very shortly. Let's just talk about the IMF first. And there's probably a couple of reasons why most altcoins, shitcoins, whatever you want to call them, aren't going to last. And you may get one more bull run out of it, but you need to allocate accordingly because it's going to be a very interesting time. And if you choose the wrong one, you're better off just in Bitcoin, or if you want to go out in the risk curve, Ethereum. A lot of things are going to pump hard. They're going to dump. If the SEC comes out and puts a lawsuit out against them, because they're not going to stop now that they've gained a little bit of momentum, it's just going to keep going on and they're just going to work their way down. So the IMF official presents a blueprint for cross-border CBDCs. Fantastic. This is definitely what we want in the world, total control. So the organization, and we haven't heard much about CBDCs lately, so there's a couple of things really going on, some good, some bad. Of course, we'll look at both sides. The organization wants to help cut the cost of cross-border transactions without abandoning compliance checks or capital controls. Of course, they want capital controls. I don't see that as such a bad thing. Governments would keep the right to limit their citizens' transactions in foreign currency and impose AML, anti-money laundering checks, Adrian said, with the IMF keen not to undermine the kinds of capital measures often imposed on countries facing a financial crisis. If they're on a Bitcoin standard, gold standard, we probably wouldn't have so many financial crises. I'm sure they still exist, but we'd have a lot fewer of them. Crypto proponents often cite easier cross-border payments as a major benefit. This is when we're talking about stablecoins, but there's plenty of competition against free float and blockchain solutions being used for that purpose. Not least as standard setters don't want to undermine government controls. The Biz Bank International Settlements and private players such as Swift are both looking at options involving state-backed CBDCs. So that's a little bit scary. Obviously, it's happening, and there's a couple of things you can do. Gold, Bitcoin. Bitcoin's probably a little bit better in the digital age. Not your keys, not your coins. Take control. Going on with CBDCs. This is good and bad. I'll tell you what the good thing is really shortly, and it's an amazing line here, which will probably allow everyone just to chill in regards to the Britcoin. So they are getting closer. A major study between the Bank for International Settlements and the Bank of England found that a retail central bank digital currency could make peer-to-peer payments cheaper and easier. Well done. People in crypto figured this out years ago with stablecoins. So June 16th, the report summed up phase 2 of Project Rosalind found a CBDC could make payments between individuals cheaper and more efficient while allowing firms to create new financial products that work to reduce fraudulent financial activity. The study also explored the concept of programmability, a term that refers to customizing digital money to behave in a specific way once certain conditions are met. Drive too much, cut off your bank account. Eat too much, cut off your bank account. Possible? Will it happen? Yes and no. It's just slow and steady, the totalitarian footsteps. So I'll get into the good thing in a minute. It's still a little bit bad. CBDC programmability has been met with considerable skepticism, rightly so. Critics claim CBDC could be programmed to work against those who use it. Overall, the study concluded a well-designed API layer could enable a central bank to interact with the private sector to safely provide retail CBDC payments. This is the good line. Despite the positive findings yielding Project Rosalind, Bank of England's Deputy Governor John Cunliffe said a final decision on if the country would launch a CBDC is still some years away. That's what we like to hear. It's years away. Stack up on Bitcoin, crypto, whatever it is, gold, silver, fine wine. fine assets, hard assets, and you'll be all good. It's just about knowing what's going on and what can you do to prepare yourself. Shout out to everyone watching live. JJ in the chat, good morning to you, brother. Bitcoin could benefit from these 3 bullish tailwinds. Before we get into Bitcoin, I just want to show you altcoins really quickly. So this is the last month. Obviously, Bitcoin's in here as well. It's brutal. You can see Bitcoin is probably one of the smallest bubbles there apart from the stable coins, which means it's gone down the least, followed maybe by Ethereum there. For every other altcoin, you would have just been better in Bitcoin or Ethereum. Yes, long term, there's some amazing opportunities here. Nobody's discounting that. But with the SEC, it is starting to turn into more of a casino, and maybe that's why they want to get rid of it. By all means, play the crypto casino game. Obviously, this video is not financial advice. Just don't go all in with your bag. The point of altcoins is to be able to get more Bitcoin or Ethereum, not to be able to get more altcoins. It doesn't make any sense. So Bitcoin, this is why I allocate most of my portfolio to Bitcoin, because it's stable, slow and steady. At the start, I started off with altcoins, and then you just shovel them into Bitcoin, and that's been a great strategy, at least for me. So Bitcoin could benefit from these 3 bullish tailwinds. The path of least resistance for Bitcoin may be on the higher side. They're words we like to hear. So top crypto by market value pulled back over 16% since hitting a high of 31,000 2 months ago. Still, prices are up nearly 60% year to date, a stellar performance compared to Nasdaq's Wall Street tech-heavy index 38% rise. With the dollar weakness and dwindling bond market volatility, dollar index tracks the greenback's value against major cryptos fell by 1.2% to 102.30 last week, registering its 3rd straight weekly loss. Losing streak has reversed more than 50% of the bounce in the preceding 3 weeks, which in part weighed over crypto prices. So this is the crux of it. Any decline in the dollar is good for Bitcoin and vice versa. That's why Bitcoin and risk assets have had their strongest bull runs during DXY, bear markets. Crypto intelligence firm noted, weekly blog post. Obviously, the Fed funds rate kept steady between 5 and 5.25% last week, pausing 15-month rate hike cycle. Remember when he had his speech? He did keep the door open for further rate hikes. And I do more and more so listen to the words he says, because he's pretty upfront, even though it's not what we want to hear. And I guess he caveats it both ways, where they could do one or the other. And maybe he's just trying to do his best, wait for the data and move forward. Maybe it's not designed to crash the banks, push everyone into the top 4. Maybe that's just a crypto conspiracy that we've all got caught up in. So maybe they are going to just stop doing rate hikes. If they keep doing it, obviously something's going to break really quickly. For every reaction, there's an equal and opposite reaction. So huge news, huge news. We covered this yesterday, and the title of it was Don't Panic, or Panic, BlackRock's Panic, because so many people on crypto Twitter are so worried about this. Guys, BlackRock is the world's largest asset manager, and they've filed for a spot-based Bitcoin ETF. That's absolutely huge. We've wanted this in crypto for so long. BlackRock has put a couple of things in place. We talked about it, like the sharing of security. What do they call it? Like SSO or something, which, the funny word, here we go. SSA, surveillance sharing agreement. And that's going to stop the market manipulation. Very cool stuff to see that happening there. They've got like a 99.8% win rate of getting ETFs through. Ultimately, not your keys, not your coins. If you're in the space now, learn how to take self-custody. But for the average person, this is a really good option, and it'll open up the floodgates. And then investors are also protected by the rule of law. So I understand, not your keys, not your coins. I will be always taken self-custody, but it opens the floodgates up more and more. And we are seeing the world turn more and more pro-Bitcoin over altcoins. It seems like they're trying to crush that industry very quick. Safe haven demand, they are talking about most lawsuits don't mention Bitcoin and Ether. This is strictly in line with Binance and Coinbase. But most lawsuits definitely leave out Bitcoin and more so Ethereum. ZachCBT, just real quick with this, an amazing person on Twitter, has helped a lot of people get a lot of money back through his on-chain sleuthing. He has been hit up for a defamation lawsuit. CryptoCommunity got together over $1 million in donations from the crypto community in just over 24 hours. So well done, ladies and gentlemen. That is why this space is so powerful. The community can come together. He talks about being sued with the thread. One of the things I like saying here, I like what he said here, is all leftover funds will be returned on a pro rata basis to contributors. You can see he is really just trying to do his best. It's unfortunate that he's put himself, it's not unfortunate he put himself in this situation. This gentleman is chasing the truth, helping a lot of people. But when people go after that, people come after them. It's crazy. It's a wacky and wonderful world, and it is a fight versus good and evil. ZBT is going to win that one for sure. Truth always wins. Etherscan, really quick article, pretty cool. Incorporating AI-powered code reader into their smart contract launcher. So on June 19th, Ethereum Block Explorer and analytics platform Etherscan launched a new tool dubbed Code Reader that utilizes AI to retrieve and interpret the source code of a specific contract address. The Code Reader's use case includes gaining deeper insight into contracts code via AI-generated explanations, obtaining comprehensive lists of smart contract functions related to Ethereum data, and understand how the underlying contract interacts with decentralized applications. You do need an open AI API to be able to use it, but that's pretty cool how that can get in there. AI is progressing rapidly, something to keep an eye on as it goes. Now, Ethereum developers, I don't see this as a good thing. I'd like to know what your thoughts are in the comments below. Just really quickly before we race through it, about 3 days time, we'll have Stephen here on the channel. Will be an absolutely amazing conversation. Really looking forward to talking to this gentleman about Sun, Pocket Stakes, Bitcoin, Swan. It'll be good fun. Hit subscribe for that. Now, the Ethereum developers discuss increasing staking limit of validators by 64x. So the proposal received mixed reactions from the crypto community, no shit, with some users stressing that it would make the network more centralized. Could do, very well could do. So they want to implement a 64-fold increase in the maximum amount of staked ETH required to become a validator from 32 ETH to 2048. Bloody hell. While the minimum staking amount remains at 32. It's a little bit full on. Nuda claims the current proposal would not only make the Ethereum network more efficient and make way for validators to earn more money, but it would also help large node operators such as exchanges, which currently manage thousands of validators, would push a lot of people out of the market as well. So mixed reactions. Several users pointed out that such a significant change in staked ETH would lead to fewer validators and thus make the network more centralized. Don't want that. If you can give the SEC an attack angle, they will come in on that vector and absolutely obliterate any project. So no more centralization. Other users dismissed the idea and claimed it wouldn't benefit the network. So we'll see how that plays out. Happens slowly, then suddenly, if they do implement it, 2048, that's a lot of ETH. That is a lot of ETH to be staking for a validator. They do talk about auto compound in that article as well. So those people just keep growing and growing and growing and growing. It will centralize people at the end of the day. Do Kwon, 4 months in prison in Montenegro on fake passport charges. He had like 4 fake passports, I think, which have been confiscated, and then he's got 4 months in prison at least. It's only 4 months. Pretty crazy, hey? I don't know if there's ever true, that rumor about where he put the ledger. Very interesting, very paranoid. And again, Stephen, on Friday my time, Thursday for everyone in America. Have a beautiful day. We'll see you on the next